All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Today we're talking about DeFi a little bit again, and a little bit of context as well. About 6 or 7 days ago, I made a video talking about Compound pretty much exclusively, and there are a lot of other platforms out there, mind you, but that the gains wouldn't last forever. And it almost actually sucked me in a little bit. There was BAT for an APY of 27% for the year. So some pretty big gains, but I realized very quickly that there's little demand for this. Now, don't get me wrong, DeFi is not going anywhere anytime soon. This isn't the end of DeFi. And I think this is, in fact, quite the opposite, just the beginning. But I was trying to make some points that there was some interesting irregularities with DeFi and the ridiculous APY rates being given for your collateral and such like that. But first and foremost, basically, Compound made BAT you normally used to incentivize digital ad consumption on the Brave browser. It was the most DeFi used coin for DeFi in Q2 2020, and the DeFi volume came in at 931 million, over 300 million more than Ether, according to a report. John Jordan, director of communications at DappRadar, a data source on decentralized app, told CoinDesk the token's overnight popularity came from generating the best return on Compound, not because of any feature of BAT. Exactly. So these are some of my points that there's not a lot of use cases with DeFi at the moment, particularly the fact that you need collateral to do it anyway. But we'll get into that in just a moment. So data from DappRadar found more than $500 million worth of BAT was borrowed on Compound in June alone, enough to make it the most traded digital asset across the DeFi space. But unfortunately, BAT's supply on Compound fell from $324 million to $155 million on Thursday, and is now down to just $24 million as of Sunday. So a rapid decline. Rock bottom borrowing means BAT's APY has now slumped to 0.17%, one of the lowest rates on Compound, which has taken out many of the lenders as well. So it was pretty wild. So if you go back and watch my previous video, you'll see that the APY for BAT was 26%, which is a little strange. And again, there's just not a lot of use case. So you have all these coins, and there was 33% just to borrow. And now you, of course, shouldn't do that. Now, part of DeFi yield farming is that you're going to other websites, putting in collateral, getting a really, really cheap loan, like something low, like 2%, like DAI or Ether, Augur, even USD or Tether, something like that. And then you take it onto a site like this that will give you more for that. So if you were on a different website and you got DAI for 2.98%, and then you could actually get, like you could borrow something like BAT on a different website and then put it on this one for 25% APR is what I'm trying to, APY is what I'm trying to say, is that you could make pretty quick money. But the problem is that only lasted a few days. So again, looking back at June 20th, we were up at 23.25%, up from 0.06% on BAT, rose to 27%, and that FOMO was kicking in, and it actually almost drew me in as well. I was like, wow, look at these rates. Then I realized pretty quick that it's a super pain to do. Well, first of all, you need MetaMask, or you need the Coinbase actual wallet app, not just the Coinbase website app, but the wallet, which you need to put a little bit of Ethereum on. So it costs you a few bucks extra to put some Ethereum on it, and then you have to use the gas to move this over, etc. So it's not necessarily free. And then, of course, if you had Bitcoin on an exchange, you need to transform it into BAT, exchange it for BAT, which is, again, not free. It's going to be a market or a limit trade to do that, unless you just happen to have a bunch of BAT on you. and which is fine if you did. But again, I was pretty much calling it to say that this is going to dump like a rock pretty fast. Now, I didn't realize it was going to be this quick, but boy, oh boy, did it die pretty quickly. So if you were thinking, I'm going to get 25% for the year, and you do the calculation, you're like, wow, that's a lot of extra BAT. No, because it only lasted pretty much a few days, maybe a week or two tops. And 25% APY for 2 weeks is basically nothing. So you kind of wasted a lot of time. Now, again, there's a lot of ways that you can actually make money doing this, and at the same time, by lending and supplying, by either borrowing or supplying to the platform, you also get compound tokens, which is effectively proof of stake. So the more coins that you have, or in a wallet with proof of stake, the more that you're going to get from every block reward. And kind of the same thing with this. The more that you're borrowing or the more that you're supplying, the more compound you're going to be getting. And there's like 2,880 to be handed out every single day. And there's a lot higher volume of compound than there actually has already been actually distributed. So compound has distributed some 48,000, maybe 5,000 or so, 50,000 compound, and yet the the volume and such on compound, you can just look on CoinMarketCap and stuff. I have Phantom up at the moment, and I'll talk about that in a minute, is way higher. So that means that a lot of these exchanges have a lot more than you, and a lot of big players in the game, people who have invested into compound previously, like, just investors overall, partners in the program, have a lot of compound that they're dumping on the markets. And because 50,000, 50,000 compound should not equal to the millions upon millions of dollars of daily volume that it is. So it's a little strange. And I think this is going to be making a lot of people money, but I think it's not going to be the kind of people that you and I are. Now, let me talk about some interesting, I think, inherent problems with compound and DeFi in general. So first of all, to actually get a loan on here, you need to borrow, and to borrow you need to have collateral. So you can turn on these little switches right here and use it as collateral to borrow something. Now, you can always be swapping around and making a little bit of money off that. I'm not going to deny that there is money to be made in this market. And again, you'd seen that 25% APY. Some people made out like bandits on that. Most got in way too late and simply didn't. But again, going to a different website, putting in collateral and borrowing something that has a high rate to supply on this website, and you can sort of do that over and over, but it's not as easy as you think. So if there was a few days ago, like a week ago, you decided to put some DAI or Ether or Bitcoin or something on a different website and used it as collateral for a loan to borrow BAT at like something like 8% or 10%, and then you put it on this website to supply it for 25%, and it wasn't more than a week later that you that the APY has sunk down to less than 1%. Well, now you're a little bit screwed, and you have to pull your supply off of here, bring your collateral back to the previous website that you used, and get out of the market. Meanwhile, you probably made virtually nothing for a week or two at that percentage. And all of the swapping around, and again, these are Ether tokens, so to move them back and forth is costing you gas. So there's 20 or 30 cents at a time gone. So did you really make a lot of BAT on that? Probably not. Some people did, some people didn't. But again, back to the little problems with this. If I was to go on this website exclusively looking for a crypto loan, which is everybody's like, wow, now I can be my own lender, I can be my own borrower. Well, I mean, can you? So if I were to put something on here and use it as collateral, and then get another token, why, aside from DeFi yield farming between different platforms, why would I do that? Because I can get a reasonable rate, but these change so fast. Unlike going down to a bank, which I hate actually defending the banks downtown, but at least those are stable. Most of the time stable rates, or if they are variable, they're really not too variable. It's not like you have a really crappy credit card. This is a bank of all things. And so I would have to put money on here, use it as collateral, and then get another coin to borrow. But if I had the money to actually use it as collateral and put it on this website, like let's say I had 10 Ether on this website and I wanted Augur, why wouldn't I just use an exchange to just immediately exchange to maybe USD or Tether or USDC coin or some kind of stable coin and then outright buy Augur? It really doesn't make sense, because if you go to a traditional bank and you say, I need $100,000 to buy a home, I want a home loan, well, your collateral is effectively your not only your bank account, but it's also your credit rating. And there's also like taking out a second mortgage, and your collateral is your home itself. You could take out a car loan. There's like crappy car loans, which I never suggest, and the collateral is your car. This is effectively saying, I want money, so I'm going to pay you. I'm going to put up money as collateral to get a different form of money. It really doesn't make sense. And these APYs are absolutely outrageous. Again, this isn't going to last very long. These rates are going to stabilize to super low because there is no demand for these coins. Now, DAI is great because you can buy a lot of things. It's like a stable coin for Ethereum. Stable coins are great. You can buy a lot of things, but there's not a lot of demand with crypto in general. Even with Bitcoin, sure, you can buy things with it, but for the most part, the massive volume is just trading volume. Trading it back and forth, hoping somebody's going to pump your coin. So there isn't a lot of demand. This isn't like US dollars and a mortgage or a car loan or something like that, where you're getting a car, you're getting a vacation, you're getting a home. So that's not the same. You're just trading one currency as collateral for another currency just for your APY to change from 27% to less than 1% in about a week's time. This is about the equivalent to a bank across the street from another bank. So Bank A, if you put money in their checking account, in their savings account, that is, and they give you 12% interest, which is absolutely outrageous. But for that 12% interest, to get a loan from that bank, it would take 30% APY on your loan, which is absolutely outrageous. So again, nobody's going to use that bank, but I know what I'm going to do. I'm going to go across the other bank where they have reasonable rates, 2% say on my savings, and maybe 6-7% on a loan. So I'm going to go get a loan for $100,000 across the street. And then I'm going to take it across the street again to the bank that's going to give me 12%. But the problem is nobody's taking out any money from Bank A because their interest rate is 30%. So eventually their interest rates are just going to match. It's the same thing if there was a gas station across from another gas station, and you always see that gas is $2.50 a gallon and then $2.50 a gallon across the other street. There's very little examples of when it's ever different than that. In fact, there was one when I lived in Mesa. It's in Arizona, and there was always these two gas stations across the street, and one of them was always 20 or 30 cents higher than the other one. And every time I drove by it, I said to myself, that's absolutely outrageous. Why would anybody pull into that gas station and buy gas when I can go to this one for 30 cents less a gallon? It was absolutely ridiculous, and it was one of the few examples I've ever seen of a competing gas chain across the street from each other with different outrageous prices. And just like you're thinking in your head, yeah, nobody ever bought gas from it. You never ever saw a car at that gas station, unless they were just going in to buy something from the actual store itself. So again, there's no demand. The APY rates are too ridiculous. They're too ridiculous to borrow, especially when BAT was at 30%. Of course it had to regulate. But you'd think to yourself, of course it has to regulate because there's no demand for it. And when there's no demand, it is a problem. And so I think DeFi still has a long way to go. And here's the problem with DeFi is that if you have to supply collateral, like basic attention token, to get Ether or Augur, why wouldn't you just do that on an exchange? Because it's money for money. I think if DeFi has to evolve, it has to become, well, quite frankly, not decentralized, because then you would have to put forth your ID and your credit rating. and you could say, look, I have a 750 credit score. I would like to take out $10,000 in Ethereum. And you would have to give them all of your personal information because they would have to be able to take legal action against you. And if you don't do it that way, you just have to put collateral up like this, which again is just money for money. And it doesn't make sense because I can just, again, exchange it on an exchange for that different coin that I want. And there's other things too, like Changelly and various other sites where you can just drop crypto and immediately get another crypto. I used to do that with Vertcoin a lot. I would mine Vertcoin, mine a bunch of it, and then I would drop it and then just get Bitcoin out of it because it was on very few exchanges at the time when it first came out, and it was really popular to mine. And I would just swap it for a different crypto. But it really doesn't make much sense to me. And the only reason why it's really popular right now, because people are making money off of other people, plain and simple. And that's sort of like crypto in general, trading and stuff like that back and forth. But at least with its trading, you're actively making a decision to sell at this price right now. Nobody made you sell at that price right now, but you did. Or you actively made a decision to buy at this price right now. So there's that, and that's my thoughts on DeFi. I hope you guys enjoyed that one. However, I want to get into a next topic. I want to talk about a coin that you guys might be interested in. And I'm not trying to shill it. I don't own any of this, but I feel like it's going to be somewhat bigger in the future than it is now. It's starting to pump a little bit. It's starting to get a little bit more traction and starting to get some actual real use cases. So Phantom's blockchain tech is being trialed in Afghanistan to solve a surprising WHO problem. So according to the WHO, the World Health Organization, 1 in 10 medical products is substandard or falsified in developing nations. So in Afghanistan, the numbers are staggeringly higher, and Afghanistan's Ministry of Health is looking to correct that predicament. So research conducted by European Asylum Support Office found that large sections of Afghanistan's rural population had inadequate access to essential healthcare services. The report detailed that 82.4% of Afghans lived in less than 2 hours from a hospital. 94% of the population lived less than 2 hours away from pharmacy. 20% of the health sector did not have electricity. 40% of medicine and medical equipment that enter the Afghan market do so illegally. So most of it is totally bunk. So they are trying to use blockchain, and here comes Phantom. So Phantom blockchain is going to be is going to be tied to the medical industry, and they are trialing it in Afghanistan, and there's some talk on forums and Reddits and things like that. First and foremost, Phantom sort of pumping, and now the market is sort of pumping now. The Dow is going up once again. I think we're at like over 26,000 points for the Dow, and so is the crypto market. We'll just open that one up. And recently, Phantom has been starting to pump too. And right now, just a few days ago, it was less than 1 cent each and is now pretty much doubled in value. So even just a few days ago, it was half a cent each. Maybe you could call that 6/10 if you want to round it. And now it's 1.3 cents each. So pretty much double what it is. And I think it's because of the news coming out. And that's not all. With Phantom. Phantom is also coming out with a DeFi platform. Now, this article is a little old now, but the hype is starting to come. Just like Ethereum, and Compound and stuff like that uses a lot of Ethereum tokens to use DeFi. Phantom is going to be sort of the base for that, and Ethereum Classic is going to jump in, but only as collateral. So Ethereum Classic is jumping in to act as collateral like some of the other coins, like ERC20 tokens. So again, this article is a little bit old. It's from February 10th, and the platform doesn't exist yet. However, when it does, I bet you, quite a bit here that Phantom is going to pump up in price a little bit. Maybe I should pick some up. But either way, ETC Labs and Phantom Foundation are collaborating to bring a decentralized finance to Phantom's ecosystem. February 10th, press release announced Ethereum Classic will serve as collateral for issuing a stablecoin similar to Maker's DAI on the Phantom platform. So Ethereum Classic is going to sort of use an ETC token for the Phantom platform. Phantom will be using the Czar network, a DeFi framework specifically developed for the project. The framework uses some of Phantom's Byzantine fault-tolerant consensus technologies to offer a blockchain environment that supports advanced DeFi options. The system allows collateralized loans, synthetic assets, atomic swaps, and is interoperable with external blockchains such as Ethereum and Binance. So Phantom has been around for a little while. I think something like November 18th, it started on CoinMarketCap, and that's usually about when a coin comes out. So it probably came out a little bit before that. But it does have some potential just because of how popular DeFi is right now. So once the platform comes up, there's going to be a lot of FOMO. So getting in now wouldn't be a bad idea probably. But again, I'm never here to tell you what to buy and when to buy. I just saw this sort of mess of news together that not only is Phantom making a DeFi platform, but they're also actually having a use case with the medical industry. So we'll see how that pans out, because there has been a lot of use cases with blockchain that have sort of failed or kind of went into the shadows, if you will. There was a lot of things, even like with BMW, there was some, and all kinds of different logistics blockchain uses, but hopefully it lasts. I definitely want to see a lot more blockchain use in the world, don't we all? But again, the crypto market sort of pumping along with it, so it's no wonder that Phantom is also pumping. But with this sort of doubly good news that there's a DeFi platform along the way and the medical blockchain thing, it's pumping as well. And I don't see it really stopping anytime soon. Now, there may be a dip after this, which is usually the case when there's something goes up like this. So maybe wait, of course, for some kind of dip. But I think in the long run, especially once that platform gets up and running, it's going to be moving along pretty quick. Of course, BSV, good old Craig Wright, N-Chain, pumping their own coin probably. I always like to say that. I have no evidence of that, but what did Craig Wright do now, right? But all the market up pretty well. So pretty good times. That's all I have for you guys, though. I hope you enjoyed it. And as usual, I'll see you guys next time.